Let's do this. Okay, welcome to the Wednesday, February 23rd market update. The 5K challenge once again sits close to about $5,200. We were able to successfully close out our short positions yesterday, and I'm glad we did. Here's that, almost $1,100 gain that we had. It's been a long time sort of, coming since we've been able to get that 5K challenge back into the break even and positive profitable territory. So glad we're finally there. If y'all remember last year when we did the 5K challenge, right? Initially we had our rocky roads too, but because in 2021 the market was so aggressively bullish, it wasn't that hard to just get long and ride some of those waves up. And last year we were able to close, if y'all remember, from 5,000 to like 27,000, which was a 450% gain. This year, so far, the 5K challenge is just up barely, like, I don't know, whatever this is, like 4 or 5%. Now, I know that doesn't sound like a lot, but in the current market conditions, the way the market has been choppy and so brutal to trade, I can guarantee you that even right now, being in profit, being in the green on the year is actually tough for a lot of people. So I'm actually incredibly proud of ourselves and the 5K challenge so far, because if you simply used Bitcoin as a benchmark, well, here's where the year opened for Bitcoin, right? Around 46,000. From here, Bitcoin itself is down 15 or 16%. That means that if you just bought Bitcoin and held from the beginning of the year, you're down 16%. And I haven't even gotten into the altcoins, because altcoins, if you bought at the beginning of the year, you might be down 25, 30, 40, 50% in some cases. So fact of the matter is, I'm happy we've traded the account the way we have so far. And I'm incredibly happy that we're now in the positive. And so far, I think our overall thesis on the market, which has been, we're still, in my opinion, in a quote unquote bear market. I know people don't like to use that term. I don't know why. There's like some allergy that people have to calling things a bear market, but I don't know what else to call it, right? I don't know what else to call a market that has been going down for 2.5 months, especially in Bitcoin, and we're down like close to 50% from the highs. I don't know what to call a market like, let's just say AVAX, which is down maybe 50 or 60% from the highs. What do you call a market like, let's just say Uniswap, right? Uniswap is obviously part of the DEX space. What do you call a market that is down from the highs here, down 80% almost right there? And it's been going sideways from this high right here for almost a year. Right? I don't know what else to call it other than a bear market. So it doesn't hurt you in any way to call things what they are or what they look like, right? In fact, it will actually make your life better if you look at the things as the way they are, rather than pretending to, assume the way you want them to be. So in the altcoin world, I have found that you right now want to just focus on the downside momentum, okay? In the same way that we looked at the market in 2020 and 2021 as looking to buy pullbacks, okay? If you just start flipping these charts around, like you can just right click here and invert scale, look at this the other way around. What does this look like? This looks like a very nice rounded bottom that looks like it's just continuously trending up. And if this is trending up like this, what does this imply? This implies lower prices in the coming weeks and the coming months ahead. And so my overall thesis on the market is still that we're probably going to just see a gradual decline in prices, whether it's BTC or whether it's alts. You're going to, of course, get big days where Bitcoin yesterday put in a 3% move, and then today, so far, it's up another 2%, right? Altcoins themselves, some of them are up 6%. Luna is up almost 10% on the day. You're gonna get moves like that, okay? Like that's not completely uncommon in altcoins, because altcoins themselves have the capability of squeezing much higher. because their market caps are significantly lower, and the short squeezes on altcoins are much easier to start coming to fruition. Because what happens is, okay, when the market starts squeezing up through key levels, right, it's like a bum rush of everybody knowing that, you know what, wait a second, this level is broken and retested, let's get long. And everybody who is selling or shorting is just going to get completely blown out. Why? Because if the overall market, right, if the overall market itself has a momentum behind it, which is Bitcoin and altcoins, and BTC is giving you the wind on the back of your sails saying, hey, we bottomed here temporarily, let's just continue to move up and up. This makes it far more easier for altcoins to squeeze much higher, because markets tend to move from one point of liquidity to another. Okay, that's really how they gravitate. They're looking for, when they're going down, they're looking for the strongest point of support. When they're going up, they're looking for the next biggest seller in the market where they can go up towards and meet resistance. Anything between that is just noise, right? Everything, the market is just really in a vacuum at most times, which is it's either trying to find a support of buyers or it's either trying to find a resistance of sellers. Everything between that point is just, up and down, gradual movements. So as of right now, we can recognize that, hey, BTC has hit this key critical low, which is around $36,500. And I mentioned to y'all how this low can be mapped out to a couple of different diagonals and horizontals. Okay, so if you go back to 25th of December, we created this support, and then this diagonal line, which has been testing as resistance multiple times, even over here, right? We broke it, full circle, come back around, retested that as support. On top of that, locally, if you see right here, on 30th of January, we created your first low, pushed up, failed, broke down, went all the way, took out those stops right here. Again, very close to a W bottom or double bottom, and we pushed up. And now we're coming back to the same point, also meeting this trend line, right? It is really, really interesting and funny how this kind of stuff works, where multiple trend lines get tested at almost a perfect time and price opportunity. And then you get a very nice release from that. But I don't believe that this release right here is the quote unquote end of the bear market, right? I didn't even believe that this right here was going to be the bottom. It was just the fact that, like I said earlier, we've met some pretty strong buyers in the market right here, even here locally. And that's what happens in a market. When you meet some strong support, or you meet, say, an event where there's a lot of selling that takes place in a particular area. For example, here, as you can see, the volume is extremely high, right? The volume is extremely high in these blocks. So when there's a lot of selling that's happened, what effectively happens is the buyers in the market see, even the market makers, right? They pick up a lot of these assets, okay? And they say, hey, we have a bunch of asset on our books. Let's just drive this thing up and see where a lot of volume and liquidity comes back into the market. And let's just start selling this back when we meet a point of resistance, which we cannot break through, which obviously happened to be right here. So sellers were incredibly strong right here. And they said, hey, whatever you want to sell, we will basically absorb, all that, or whatever you want to buy, we will basically absorb all that. And because we're loading up shorts, or we have our own asset to sell. And from that, the market went down. Okay. So again, a point of where price has met a pretty strong buyer to a point here now where price has met a pretty strong seller, going from one area of strength right here to another area of strength right here. Okay. Sorry for the terrible drawings. But that was the only way I could illustrate that. Now, at the same point, right, you see all these altcoins popping, okay? What I'm interested in doing right now, I'll tell you all right off the bat, is in the 5K account, I want to short AVAX again. I think AVAX probably has one of the better looking structures. It's already up almost 9 or 10% on the day. The 76.5 marker was the beginning of your resistance point. Obviously, we blew through that, and I'm glad I didn't place any orders right there, but we blew through that, and we went all the way to the next point of resistance, which is on the daily basis. Okay, on the daily basis, you can kind of see, this is a clear point of an SR level right there. So we're coming back into that $80 area. I think this is probably a pretty decent area to get short. Okay, again, not investment advice. That's what I'm doing. But I think this is a good area to start, thinking about short positions in the market, right? A lot of people will look at this candle and say, holy shit, I missed a 10% move. Let me just get long now so I can catch another 10% move. Maybe that happens, or maybe it doesn't. Maybe the chances are high that this thing is just retesting, doing a backside retest right here. And over the next, 24 or 48 hours or some point, it's going to roll back over and hit the next biggest point of support, which is this $60 marker, which is where I have my eye on. All right. So that's my overall thought process for, alts right now is I think they're just doing some mean reversion. They've sold off aggressively, right? Like if you look at, let's just say something like One Harmony, if you do a Fibonacci like retrace, One Harmony from here could possibly get to 236, maybe 382. If it's really strong, it might get all the way to the 618 fib right here, which is around 195. But generally when an asset is weak and it's broken down like this, it doesn't really have the strength to go past maybe 25%, right? So which would be around 16 cents right up here. And then it starts rolling over again, okay? In the same way, that's actually what happened with One Harmony right here. From this high, it sold off all the way down here. Guess what? It went all the way close to this 382 marker. See that fib right there? Which just happens to be anywhere between 23 and 38, right? So let's just say 30%, okay? It went up 30% from this high to this low, and then it collapsed back down. See, this is the definition of assets that are weak, okay? Because they're not able to keep squeezing up to the upside in these fib retraces. A stronger asset is something like Luna, which locally, if you look at it, let's just say from here, right? From this point, it dropped all the way right here. Guess where Luna is already? It's already at the 618 fib, okay? This is ideally the area that you want to start seeing a drop. If you don't, it might squeeze up higher. It might get to 64. It might get to 66. That's just how assets are sometimes. They get pretty darn close and deep into the previous point before they, eventually drop down, right? So keep an eye on Luna. In case it squeezes up higher, the next point of resistance would probably be $66. I'm not particularly sold on the idea that markets are bottom and they're going to squeeze up higher, but I'm also not one to, just put my eggs, all my eggs in one basket and just say, all right, guys, we have to go down from here. I'm going to go net short on everything and, go heavy size and pray to the gods that we go down, right? Like that's not really a good way to go about decision-making in trading. So what I've done is I opened a small position, $750 compared to my $5,200 that we have on collateral. And, in fact, I would not mind adding to this short position. Okay. If we get to, I don't know, maybe like 83 or something, I would not mind adding to this. You know what? In fact, let me just do this. Okay. I'm going to place another 750 order at 83. If we get there, I would ideally like to add to my short at 83. Okay. So I'm just leaving another 750 order at that point. So anyway, that's what I'm willing to do for now, right? I'm willing to take the chance and add to my short position. Now, what if the thesis is like, okay, I'm wrong and that the market has bottomed and we might be heading up? That is something that I have kept in mind, okay? What if this was the bottom? What if this was your first local higher high, and this is now your higher low. So you have your low, your higher low. Now this thing is going to start trending up and just start, ripping through these. What if that's the case? Well, in that particular situation, if BTC starts trending up higher and higher, then we are wrong. And that means that we don't need to go short. Okay, then we probably need to close shorts, get long. It's as simple as that. Okay, I'm not quite sure about that just yet. Looking at it just strictly from the BTC standpoint, but then also looking at it from the stock market standpoint, I'm not fully sold on where we are contextually. I think, like, if you look at this low right here, so this was the previous low that we set here in September and October of 2021 of the S&P 500. We've since come back to that low, tried to hammer it multiple times, right here in January 25th. Once again, coming here a day or two ago on 21st and 22nd of February. We've basically hit it multiple times, right? And on top of that, you kind of have this pretty massive head and shoulders being created. So if we start breaking down and trending down from here, I think it's going to be a pretty epic sell-off that happens in the stock market. And I would believe that the epic sell-off will also translate into crypto, in which case BTC will at the very least get down towards this low, which is 33,000, and quite possibly begin putting in a new lower low as per last year, which was $30,000 low, right? In which case we would go down to like 28, 27, something like that. Okay. But like I said, we're going to take it one day at a time. You don't want to fully buy into a bias when the market itself is so choppy and so uncertain. You want to stay as nimble and as flexible as possible, because when the market is giving you good signs on, one trade or the other in terms of risk to reward, you want to take it. You want to take it, and you don't want to get too cocky about being a bull or a bear. Okay. There is a question in the chat, which I want to answer real quick from one of our friends. He says, hey, Amo, great call on the recent shorts on AVAX. Glad we took profit on the AVAX short position. Okay, hugely successful call. Okay, there were 3 consecutive bars at the 4-hour time frame, maybe 3.5 bars. Let me see here. Can you confirm the key arguments to your decision? Okay, I think he means referring to AVAX. So, okay, all right. So I think the question is, why did we close out where we did, if I'm not mistaken? Okay, this was a hugely successful call. Could you confirm the key arguments on your decision? And there were 3 consecutive at 4-hour time frame, maybe 3.5. Compared to the previous bounce, alts were increasing at a faster rate than BTC. Okay, yes. So the question is, why were we able to recognize in this pocket that we want to get out? Okay, simply due to 2 things, right? Number one, remember, when we draw channels, we also pay attention to this middle line. We call it the EQ, or the equilibrium. In the same way that when we draw a range like this, we pay attention to the midpoint of the range. If this is the high and this is the low, you want to see how price reacts to the midpoint of the range. Okay, it's probably going to go up, do something like this and like that. 50% is basically like 50% fib or 50% retrace is how these ranges really work out. Okay, whether it's in a parallel channel or a horizontal range or a diagonal, uptrending range. So that was one reason where I recognized, hey, wait a second, we're coming into this area, right, with some decent volume, but we're so oversold on so many alts and even BTC, because remember, I pointed out that in BTC, we had hit, number one, this marker right here, which is 37,250, which we were not able to blow through. This is a marker that I've kept on my chart for several months. Number two, recognizing that on the smaller time frame, we had this diagonal right here coming down this way, and then this SR level, pretty good opportunity to, potentially turn around. And number three, if you actually go here, here's my other chart. I had this wedge, if y'all remember, this wedge that I had drawn, right? And I told y'all, the way this is going down like this, grinding at the bottom side of the trend line without just nuking, it makes me worried that we're not actually going to be able to break this, because there's actually strong buyers lining up every time we drop at the support level of this trend line. Okay, so we're actually gradually grinding down. We are going down, putting in lower lows, but not at the same way, like this, the way we were dropping back here. We actually kind of slowed down momentum. And you can always recognize momentum when a market goes and does something like this, drops straight down, then it does something like this, drops straight down, and then again drops straight down. But at the same time, you're actually not really dropping straight down like this. You're actually going down in a gradual manner. This is where you have to start recognizing, why is the market doing that? Why is the momentum shifting from what we did here, which is a straight sharp drop down here, versus now we're funneling down? And so when you start recognizing these things, right, when you've watched the markets enough, you start to realize the markets are actually showing you something, which is that, hey, we are not able to break through key support. We're creating this funnel, which is, this funnel right here specifically is actually a turnaround reversal pattern once it starts pushing out. I had pointed this out yesterday, right? I said, if we break out of this funnel, all right, then you have to start measuring like from the highest point to the lowest point of the funnel. You put this at the top of the breakout, let's just say right there, or even right here. So from the point of the breakout, the measured move is about 41,000. That means we should be going up to the $41,000 level. A lot of the times, the patterns like this don't really play out exactly to the target, but they play out enough where you realize something is wrong. My short thesis is wrong. I should stop being a bear. I should stop, opening shorts or thinking about, going short every step of the way up, right? That's where you have to start recognizing momentum shifts. And when we closed out the short yesterday, I told y'all one thing, which was, I don't quite feel confident in going long, but I sure as hell don't want to be short, right? And it was as simple as that. Secure the short profit, because guess what? The trend over the last 2 months has been on your side. If you're short, you're making money. Being long, you have to be a little bit more precise with it, right? You can't just willy-nilly, go long and, pray to the gods that we start a new bull market, because obviously that has not been working out for the last 2 or 3 months. So going short is actually the easier bet. So one of the reasons why I start to recognize alts were probably bottoming is because BTC was probably bottoming. And then at the same time, when I started to see AVAX coming into the middle channel right here, which is close to about the $70 level, I said, okay, if BTC is bottoming, AVAX is also bottoming at a good point. And then I started to dig into the 4 hour and the 1 hour of different charts. And I said, okay, well, what is happening here? Have we broken through structural lows where we might head lower, or are we just finding support, right, locally? And could we just go back and retest some key levels like 76.5 or that $80 level that I spoke about, and then we start dropping back? And I think the probability was high that we were so aggressively oversold. And when you start seeing big candles like this, by the way, right? When you start seeing big candles like that, and then you start seeing like a turnaround like this at the same time where BTC is also potentially bottoming, probably a good time to start rethinking your short bias or start closing out your position, okay? It doesn't hurt. When the market has gone down a decent amount on big candles like this, just ask yourself, what are the odds that BTC is lying to me in this funnel? And what are the odds that we just create another bigger candle from here all on the way down, and we get to the next point of support, which from here would have been another 10% drop. See, altcoins generally don't drop more than 10% in a day, especially good altcoins like AVAX, unless the overall market is so weak that everything is just getting sold like, just firecrackers blowing up. So you have to look at the market and say, you know what, a 7 to 10% drop on an average day is pretty good. That's a pretty oversold, level in terms of just looking at the market. So you can kind of see that the turnaround for AVAX was actually from the high of this wick to the low right here. That was a 15% turnaround. And if you just looked at the candle itself, AVAX, yes, this red candle right here put in a negative 9.4% day. So anywhere close to 9 or 10% down on a day or up on a day, that's a pretty damn good day. Okay. Just don't get greedy and say, well, it's only down 9%. What if it goes down another 9? Well, the probabilities of that are low, right? So you want to start securing the bag. You want to start securing and taking your profit and just being cautious in the market. Okay. Is that clear so far? Am I making sense? Or am I just talking to myself? And the reason I'm mentioning that is just because, so you guys know, whether it's the long side or the short side, like you don't get too greedy, right? If the markets are showing you, you know what, hey, we're bottoming out, BTC looks like it's finding support. I had also pointed out, like, there were some walls that Bitfinex buyers were putting up. Honestly, I'm not really a big believer in that when a market is trending down for like the last 2 or 3 months, because guess what? On every step of the way, there were buyers that were putting up walls. But after a while, like, those buyers, like for example, here, we still went down. I remember there was huge buy walls that were set up right here. I also remember there were big buy walls set up here, but guess what? We blew through it. So I'm not a big believer that when the market is trending down, right, those walls, in my opinion, are just put up for the sake of let the other people in the market see my big walls and front run the price. Like imagine if you saw that there was a $100 million wall as the market is coming down right now. So let me zoom in. So if you saw today that there's a $100 million wall at 38,500 and price is trading at 38,700, what would you do? You'd say, well, shit, like obviously that guy's going to support price. Let me just start getting long now, right? Because obviously that person wants to drive up the price. And many people like you and me will start seeing that wall and we'll start doing the heavy lifting for this guy who hasn't even filled his orders. Because remember, it's not that hard to put up a $100 million wall, right? If you have the money, you just start flashing the order book and saying, hey, I'm willing to be a buyer. But are you really wanting to be a buyer? Or are you really just flashing the goods, and saying, hey, I might buy, I might. So that's why it's more of an advertisement rather than the actual idea of, that person being a buyer. Yeah, they can be pulled last minute. Yes. So I think the best walls are actually, so let me show y'all what the best walls look like. Okay. And they're called Iceberg Orders. So Iceberg Orders, so I've switched the order book to 0.1 denomination here in AVAX. The reason I'm doing that is because, okay, here's an Iceberg order that I'm going to just give you an example. See this like order at $80. Okay. So let's just say we were today trading at $80 flat, 80.0. Okay. And this order right here had 2,600, but then someone sold 2,600, yet it kept refilling. And someone sold another 2,500 and it refilled again. And it kept refilling and refilling and refilling every time someone sold at $80 and filled that buy wall. So what does that mean? That means there's an iceberg order that someone says, hey man, I got infinite money. Keep selling me everything that you got for $80. I'll buy it all. That is an iceberg order. And that is one of the strongest orders. The passive limit orders, they can be wishy-washy. They might be a buyer or they might not. They might just say, screw this. I don't want to be a buyer, because the market's going down. In fact, all the people that bought, screw them. I'm actually going to be a seller in the market. And that person might just start shorting. They might recognize like, hey, a lot of people were trapped at the top. Let me take advantage of them because they clearly saw me, putting up my buy walls. Maybe so many people bought on high leverage that I can force them down and liquidate them lower in my short position. So you have to think like, game theory wise, like, in poker, they say the best strategy and the best poker players are the ones that recognize that, what do I have in my hand? Is it a good hand or a bad hand? And then you have to make the other person, you have to think that what does the other person think that I have in my hand? And then the third part is, what do I want the other person to think that I have in my hand? Those are the best poker players, right? Because they can basically manipulate the game into a way where your shitty hand can actually become a better hand by simply, I don't know, maybe changing the bets differently, betting differently on different cards on the river, right? Things like that. And it's the same way in markets. It's like, what could be the intention of this buyer? What is their purpose of putting up these walls? Cool. All right. Anyway, I don't want to lecture y'all too much. So here's the stock market opening up. Let's just do this real quick. I just want to check out some growth stocks and then we'll wrap it up. All right, stock market opened up slightly and now it's starting to become red on the day. Ideally, right? If you want BTC to bounce higher, you need the stock market on its side. If the stock market starts going down, I wouldn't be surprised if BTC also starts going down, in which case, crypto starts going down. Okay, let's check out some growth stocks in tech and then we'll wrap it up. Ouch, Tesla already down 1.3% on the day, not good. Let's check out Square real quick. Bloody, what a bloody mess. I mean, look at these assets, right? Like, look at Square. Okay, look at Square just, dropping like an absolute shitcoin. PayPal, look at this. This is like, these are good companies with good revenue models, with actual products, utility, usage from people all over the world, millions of customers. And this is still how it drops. This thing is down from the highs up here. It's down 66%. That's insane. Let's check out Shopify. Again, another very strong company, right? Look at this. These are basically like our shitcoin charts in crypto, 64%. Look at this, ARK, absolutely brutal, 60%. So I don't know. I just think I think we're just sort of discounting the amount of pain that could be inflicted in the crypto markets, like in the span of the next few months. Overstock, doing okay. It still doesn't look healthy because guess what? This is your range high distribution, right? This is like a clear Wyckoff distribution. This is basically your low right here. This is the bottom. And we're retesting that. If it starts breaking down from here, the opportunity here is you can basically, I don't know, on a day like today, you can buy puts in the market, right? And aim, I don't know, somewhere down here, $20, $23 or something. That's a 50% drop. And that could be, I don't know, short dated options, like let's just say middle of March. If the market is really getting bearish, right, and it's really going to sell off, it should drop fast. That could be an amazing put buying opportunity. Non-investment advice. Again, this is just me thinking out loud. I don't want anyone to buy puts and say, hey, well, you told me to buy puts. No, I didn't. I'm just speaking out loud, okay? But anyway, that's what I kind of am looking at in the market. All right. That is about it. We've talked about StarkNet before, right? This is one of the projects that I'm very closely paying attention to. Obviously, disclaimer, I have no investments. I have no affiliation with the team. Same thing with Celestia. I have no affiliation or investments with the team. In fact, with Celestia, I'm in their Discord right here, and I'm trying to use my other computer to create a half node or a full node. So I can just kind of test out what kind of network they have, what kind of blockchain they use. So it's just, something that you can kind of look at if you're interested. Okay. Celestia and StarkNet. And then other than that, there's really not a whole lot else I want to talk about. Obviously, yesterday was a pretty bloody day in the market. If it's a bloody day today, shit, it's going to get rough. The other thing, obviously, the Russia and Ukraine stuff is still very, very hot. Any person who thinks that's a bluff, I don't know what to tell you, man. Like, this does not seem like a bluff. You know, a couple of years back when they just like cut off part of Ukraine and Russia just said, well, this is ours now. I'm pretty sure they could do that again. You know, when a country like that shows the intention of moving more troops, bringing medical tents to the border, bringing more artillery and weapons, it sounds like they're gearing up for a war. And that's not something that the US wants to be involved with. I don't think that we care to be involved with, but we might get dragged into that, unwillingly. In which case, I fundamentally believe that the stock market will see that as the final trigger to just all hell break loose. I'm hoping it doesn't happen. I still have a hope that it doesn't happen, where the US or the EU doesn't get involved. But I don't know, guys. This is not looking good. I pray for the people in Ukraine. So let's see. Anyway, if you want to gauge exactly what could be happening on the Russian side of the market, okay, you just go to the Moscow exchange. When you start seeing the market becoming panicky in Moscow, right? Like what happened over the last several weeks like this. I mean, a market like that doesn't just drop for no reason. You can make a reasonable argument and say, well, the market is probably anticipating, I don't know, a war, some shitty times ahead, a devaluation in, the country currency, right? I know the ruble itself, the currency of Russia, has gotten completely annihilated lately. The stock market is clearly getting beat up. So it's like, there's so many signs to kind of warn us to be much more cautious that, I don't know, I'm not really interested in thinking about when the next bull market will start, because I don't even know if the bear market right now has ended. So what's the point of me thinking, 2-3 months or 6 months ahead when we have so many current events that are creating a blockade for markets across the world? All right, anyway, I don't want to rant on about this, but that's really it. Talked about the levels in BTC, some of these altcoins. I am short. I will continue to be short. Yeah, that's about it. All right, thanks everybody. Thank you for watching. Y'all take care. Good luck. Cheers.